Vivek, hi. If you're with us and listening, we like to have your calls for today for our viewers.
Okay, so there are four stocks which I would like to kind of talk about. Two stocks which are low risk stocks and two stocks which are high risk stocks. Uh, See what has happened in market for the last 6 7 months or so. First, the category of sector or stocks which were showing some kind of a growth momentum, even in these downturn, has shown some kind of a recovery. And then came the cyclicals who participated in the rally because of the interest rates being low. I believe now we have to identify stocks which are doing good in their business as well as who have value inside their company. So what I have identified is two frontline stocks which I believe are doing good in their business and have a lot of value. One is SDFC Limited. SDFC Limited, being the housing finance company, has seen a lot of moonshots in couple of few weeks, and also it is holding quite a significant stake in other major companies like SDFC AMC, SDFC Life, etc. So I think a combination of growth and value inside this company could be very very interesting. So SDFC, and the other stock is SBI. So if someone is looking to hold on to a stock for a longer period of time, I think these two companies would be a lesser risky bet at this stage of the market. The second, I would say, the higher risk stocks which I would advise people is one is on the residential real estate, and I've been talking about the residential real estate, that how this whole sector is getting re-rated because of lower interest rate regime and how things are looking very good for a cyclical recovery point of view. So I think Bombay sector specific real estate stocks have done very good. Stocks like Suntech Realty or stocks like Opera has done very good. But I think one stock which is based out of Bangalore predominantly is Shobha Realty. One can look at that stock, again more of a residential real estate play for a cyclical recovery in this sector. And the second stock on the risky side is on the auto ancillary side. See, auto sector has seen a lot of recovery because of obvious reason that people are now buying their own cars or buying their own automobile and not traveling in the public transportation and taking their own transportation. I think the next leg of major recovery will come in these auto ancillary stocks. So one stock which I would advise people to look at is Subros. Now, Subros is again a very interesting company. It has been owned by Japanese giants, and we all know that it is quite a leader in the car AC domain. So I think this is one stock which has also given a breakout. So one can look at this stock from a sustainable long-term holding in the position. These are not for today's position or tomorrow's position. These are for a maybe holding on for a period of say 1 month, 2 months to get a decent return from these stocks.
Okay, all right. Kunal, coming back to you, what are the high risk and low risk ideas you have for us?
Well, surprisingly, in this market, I have a couple of low risk ideas, Kanya. But so the first one is a band Fortis Healthcare. I think it's a very very interesting chart. Fortis, the stock, in the last couple of weeks has shown very strong recovery from 125, 130 levels to almost the 155, 160 in picking distance of 160 mark. I think it's an excellent setup on the long term, medium term charts as well. Double bottom formation on the longer term charts, and I believe that the stock should potentially move up significantly higher. There are some fractal patterns as well, wherein such a kind of occurrence has happened for Fortis in the historical charts as well. So that has led to a strong revival of trend for the stock. So this is going to be interesting stock to watch out for. I would suggest a buy with a target of 170 for the near term and stop loss to be kept at 152. The second would be a buy on Maruti. Now, again, a stock which did pretty well in the last couple of days. There was a touch and go movement towards 8,000 mark as well. Stock has cooled off from those 8,000 levels to 7,600. And in the process of doing this, it's now come back to a multiple support zone, which was there at 7,600. So I think at current levels, the risk reward is extremely favorable for someone who's looking out to venture into large cap names. So buy on Maruti at current levels, targets of at least 7,800 and stop us at 7,500.